Welcome to Oracle ETFs. This channel is about specific strategies for you to turn what is known as dashboard money into real money. Okay, we like push button money here. Okay, and this is the new paradigm: dividend income, not your grandfather's wheelchair retirement. We don't even say retire on this channel. We say Lambo. Okay, so these income ETFs are new. Today I'm going to show you a specific strategy that I invented a while back called the TSLY sandwich. Many YouTubers tried to emulate it. Some of them shot it down. They all just did it wrong. Today I'm going to show you how I'm doing it, and I will update you on this maybe once a week on this specific move. The TSLY sandwich. I am not a fan of Tesla. Let's just make it clear. My background, just so you all know, before, I've always been in business. I've been on CNBC, CNBC, The Big Idea with Donnie Deutsch. I've been on Bloomberg, Taking Stock with Pim Fox. This doesn't mean I'm a financial advisor, and I beg of you not to follow me. What I want, I have a lot more liquidity than you. I can do moves that you may not be able to. Okay, so what I want to do with my channels is stimulate ideas within you. And then you can share those ideas with me in the comments. Okay, it's a community thing. Today, I have a very exclusive Discord. Usually you have to get on the email list to get an invite. I'm going to leave you a link today. I'm going to delete it after a few hours. So the first people to see it and go into my description box can get into my Discord. Stay tuned. I know you have ADD, okay? Dividend deficiency disorder. I know that's why you've been yield blinded, chasing yields. Many of you are losing money. You know, I did a video yesterday on capital depletion. You should see it. Not NAV erosion, capital depletion. Look at Jay's mouth when I speak, how stunned he is. Now, let me show you. I'm going to link all the channels below in the description box, possibly with a Discord invite. Do not come in with Discord Nitro. You've been in other Discords. They're jokes. This is Oracle ETFs. This is another channel. Okay. No, actually, that's my main channel. Hold on. Oh, I brought it up twice. So we have Oracle ETFs. We have high yield ETF income. And again, yes, those are my cars. You've seen live from the Lambo and blah, blah, blah. Okay. And I'll link these down below. All about the same thing. Oracle income ETFs, where we throw dwarfs through the wall. Okay, we laugh at Dave Ramsey. And, well, it's just wild income. But my main channel is the one that you're watching now, Oracle ETFs. So why do I have these channels? Why do I have so many? I'll get to the point. We're going to talk about the TSLY sandwich. I have so many because I have so much content that if I don't have multiple channels, I'll tend to put out too many videos, and then it hurts my views. Okay, YouTube is very fickle. Again, I mean, if 2,000 people are watching my videos and I get 100 likes or 200 likes, that means 90% of the people didn't like it, so they're not going to circulate it. They won't even show it to you if you're a subscriber. Everybody else wants to show you a spreadsheet, a fictitious what would happen 10 years from now. Okay, I show you my real strategies, my account. I am looking down here to see if I can find the original video. It was about 4 months ago. Look, they tried to ambush me, right, on a live stream. Boy, were they in for a shocker. I didn't fall off the YouTube truck yesterday. I come from a world of cryptocurrency. For the past 7 years, I've been a major crypto influencer and well, a degenerate leverage trader, and teaching people how to do that. But anyway, so I came to this space because I seen the opportunity that I seen in crypto. I seen the opportunity that I seen in crypto in 2017. We can make money with these funds if we take advantage of them and not let them take advantage of us. Look, the Khamir's. Do you know I found Khamir's brother? I'll show you if I have time, but I want to keep it simple. I am looking for the video, the TSLY sandwich. 4 months ago, it wasn't the right time, because if we take a look, TSLY was $24, I believe. It was either TSLY or fiat, right? Crash, I meant. And because I'm not going to watch the video. I've seen other YouTubers try to do it, but they did it wrong. See core compounding, focusing on a number. That's what I talk about. Well, let's dive in. Since the funds can't do it for us, be it create a stable NAV, I don't call it NAV. I call it my capital because it's my money I put in. I feel if we're in a covered call fund and they are generating income, okay, they pay us the dividend. Now, you have to understand quickly, I'll give you the mechanics of this. Again, if you like the content, subscribe. Nobody else will do this for you. I am the real deal. Let's talk about this. So, my capital that I put in, if I'm in a covered call fund, the mechanics, just like any dividend stock, a dividend ETF is the same. The day it pays the dividend, the price is reduced by the amount of the dividend. Why? So you can't cheat the system. It's the rule. Now, this is never in the old paradigm in the Warren Buffett days. He can't even use a computer anymore from what I hear. I don't even know if he's alive. He could be a hologram like Tupac. Who knows? So this is my Discord. It's super simple, but we were talking about the old paradigm of paying out dividends once every quarter, like Apple, like, I don't know, whatever. I'm not in that paradigm. They wouldn't have NAV depletion because they would have plenty of time for the stock to recover and recover back the dividend that they paid you, okay? Now, we jump into the new paradigm where we're getting paid every month. Well, that might be too frequent for a specific stock to recover. What you need to realize, okay, what you need to realize is something very, very simple. There are 3 reasons why you will have capital depletion. I talked about this in yesterday's video, but before I show you the TSLY sandwich and how to do it right, you need to understand this. It's your money. You can't just collect dividends and buy every stock so you get paid every week, okay, and live off the dividends like that. It doesn't work this way. You see, there are 3 reasons why you deplete your capital, okay? 1, they are just trying to pay you too much as a marketing ploy to suck people in, especially when a fund is new. Yeah, they control the payout. So let's say they pay you more than they're actually making from the options trading, and then the dividend day comes and, you know, the stock market does its thing and reduces the price by the amount of dividend, but they paid you more than they're earning. So your capital is going to deplete. You might think in this, now that's, I'm going to give you, that's situation 1. Situation 2, maybe they're just shitty traders. Maybe they're not good traders. Maybe their prospectus limits what they can do. Maybe their prospectus, maybe they were a pioneer in paying monthly on single stock covered call ETFs. But by being the pioneer, they are now antiquated. Their prospectuses need to be rewritten. New funds are going to come with new prospectuses that unleash the traders, and maybe they'll have better traders. Third and final way that you have capital depletion, and I look at this like if I pick right, I should not have to invest. My capital should stay flat or moving up and to the right, okay? And I get my dividends. I should not be forced to reinvest. So there should be no capital depletion in a perfect world. I am trying to create this. Now, if you do manage to get into my Discord, there are 2, everything's a chat room, even the lounge, okay? But I keep it simple, okay? Now, there's the manifesto rooms. One is on core compounding and one is on profit ripping. I used my AI shadow to go into detail about every single way you should do it. And then I show you a real-time example. Not going to go into it now, but I put $150,000 into Phoebe the other day. This is a temporary thing. Okay, I'm going to get the dividend, and then when we go ex-dividend, 13 days later, earnings. So what does that mean? People are going to get excited about the meta earnings that are coming up 13 days after we get our dividend next week. Okay, because we're in Group B with Phoebe. Don't follow me. Now, my thing is this. I'm going to be ripping profits off the top, and I will be out by earnings. This way, I de-risk. I have no earnings surprise. I got the dividend, and I made profit on the growth of the shares. Ever since I touched Phoebe, it went up. The day after I bought in, okay, $150,000 worth of Phoebe, it was up to 153. So what did I do? What would Oracle do? WWOD, he would take the money, put it aside. The next day we were down. Let's jump into the most exciting part. Are you ready? Yesterday, I wanted it. It wasn't just for the dividend. So I don't think in terms of dividend or yield. Okay? You have to understand. And one other thing I want to tell you, when you're in a bad fund and it's going down and you're reinvesting, draw the line in the sand. Give yourself a core number and say, okay, I'm going to start here. And every time it goes over that number by a substantial amount, rip the profits off the top and keep them. Okay? You will slowly exit the position. Reinvesting, many people when they're down in funds, and YouTubers will tell you to do this, fund managers will tell you to do this, because they want to keep your money on the platform so they earn fees. YouTubers do it because they're just ignorant. Reinvesting in something that's going down is putting more money into a bad investment. You are betting on the future. We don't live in the future, we live in the now. My channel is about the velocity of money and making money now. That's it. So 4 months ago I introduced this, but it was the wrong time. There was a great disparity, a great divergence of the two prices. Okay, that was one problem, which left room for one of them to go down greatly. Now, you might say this makes no sense because they're both capped. Crash is capped on the downside. It's only going to get part of the downside and get hurt when Tesla moves up. And TSLY is capped on the upside and is going to take all the downside. Of course. That's why they pair up so nicely. If and only if you did what I did. You do not, and by the way, you want to talk about yield? Okay. TSLY's paying $1.09 and Crash is paying 98 cents. That's over $2. Okay? I am looking to keep, and what a pun on what I'm about to say. I am looking to keep this carbon neutral. Many of you lost tons of money in TSLY. I don't know why you would believe in Tesla like that. I mean, the Khmer's, it's all a disaster. And then the reinvesting into, that's like going, again, I'll say it, going into the store and buying or asking where they keep the rotten fruit. Because you got some money and you want to buy some fruit. But for some reason, you want to buy the rotten fruit. I don't have time for that. I don't have time for dollar cost averaging, reinvesting blindly, especially reinvesting in something that's going down. Let me open your eyes so you can now see. Is like trying to fix the hole in the Titanic with bubble gum. Think about that. Keyword, if you stayed this far in the video, bubble gum. Okay? Bubble gum. Tell me you're reinvesting horror stories. So it's like, let's keep going. We are creating a fund here. Yes, I have no love for Tesla at all. Okay, so this is going to pay $1.09 per share. $1.09 per share plus 0.98 cents. I want to look at this as one fund. Okay? Yes, both of them are capped in both directions. That's perfect. It equates the balance of things. This one, let's call it a $20,000 fund. I'm going to focus on the money. I don't care about the shares. I don't care about anything else. I'm going to focus on the money. I'm going to get $2.07 dividend. And it's not from one, it's from both. Here's the magic and where everyone else has gone wrong. Both of these I bought at the exact same dollar amount. Look at that. If I could have got that 60 cents right, I would have. But that's as close as you can get. I did something else. I did something else that made this the perfect opportunity as well. I bought them at almost the same price. So by buying them both at the same price and the exact same dollar amount, I have created something. that should be carbon neutral. What do you mean? Well, I'm going to collect the dividends. This is going to be $20,000. That's going to feed me almost $2,000 a month in dividends. Okay, I'm just slightly off. But I don't want to have 1,000 shares. I need $10,000, $10,000. I am only willing to commit $20,000 to this. Okay? Now, one day, one of them is going to be up $1,000, and the other one's going to be down $1,000, or close to it. You know what I'm going to do? I'm going to sell off the $1,000 off the top, and I'm going to feed it into the other one to bring it back to its number. And I will create a stable NAV. Now, this is not going to work with tits. Margin to the tits. Say tits in the comments if you caught that. That's the key word that you made it this far. You should be proud of yourself. I'll acknowledge everybody who made it this far. So, tell me if you're understanding this in the comments. It's not about the funds. I wouldn't do this with NVIDIA crash. Why? If I did this 4 months ago, it wouldn't have worked, because I didn't have the key. The key is both of them came down to the same price at this moment in time yesterday. Okay, so now I will go ex-dividend today. They've already gone ex-dividend. Let me pull up my account for you and show you. And as I do this, okay, I want you to think about something. Capital depreciation. Capital depletion. Tell me what you think about capital depletion. I've created this term. If you hear anyone say capital depletion, you know it's from the Oracle, and correct them. Okay? Because they talk about NAV erosion. That's not what it is. It's my capital going away. So it's capital depletion. And a main cause of capital depletion is destructive returns. That means a greedy fund that's paying out more than they're earning, because they don't care. They want to suck in all the ignorant, those who can't see, those who are, here's another Oracle term, those who are still yield blind. A moment of silence for those who are yield blind. I'm going to end it here. Oh, let's check in real time. Markets are down. Great. Okay, I have a nice slim down position. I have cash buffer, and I have a carbon neutral position. I want you to make sure you understand how specific I am about when I do the TSLY sandwich that I created. Never before was there an opportunity to get both of them at basically the same price. And the key thing, the key takeaway, is to keep them balanced. My number is $1,000. Less than that, I'm not going to take a taxable event and create a complication for $200-300. $1,000 up on one, it'll be either a really good day or a really bad day. And I will move the $1,000 from the good one to the bad one. And I will keep them balanced. I want to stop it here. Tell me if you see the genius of this. And all I want to do is collect that fat premium every month. I almost think this cannot go wrong. Tell me. Now, again, if you've done this in the past, you probably did it when the prices were different. You probably did it. You probably bought an even amount of shares or some stupid shit like that. I can't help you with that. This is how you do it. Shout out to the working investor for giving it a shot. Bro, tell me, does this clarify the method? It's not a 60-40 split bullish bet. No, it's the dollars. This is its own fund. This is my ugly girl. This is my ulti. You know what? I named it slutty. Yeah. Keyword, if you stayed to the very end, slutty. Slutty. I wonder if that could be, SLTY. Slutty. And slutty is available. SLTY. So, fund managers out there, here's a shout out to you. I spoke to one the other day. I can't go into it. He didn't want me to talk about it, but they didn't even know what Roundhill was. He had to look it up while we were on the phone. Yeah. I called a trading room. But I don't do interviews and stuff. I'm not about that. So slutty is available. So welcome to slutty. Keyword, slutty. Have a nice day. I really want your feedback. You think I'm going to fail? Watch me, nay. Let me pull up my account. Oh, damn, it's 7 o'clock. All right, I have to go. We'll have to leave this for another time. But looks like a red day. So don't buy the rotten fruit Have a nice day. Keyword, slutty. SLTY. Imagine that if they make a fund slutty. You stupid fund managers. Go ahead, have at it.